day, all. Ira Epstein of Linn Associates on your Meltdown Monday. Yeah, another Monday where we melt down in the market. Big time, by the way, in the financial markets. For September 20th, 2021, we're getting on now at around 623, 625, right in that zone. Let's talk about things. Some of you wrote, if you check the YouTube page, hey, Ira, you're calling a big break in the market about a week ago. And that's because I started you off in September and said, folks, September's a historic, ugly month for stocks. It's generally a down month. October's a super volatile month. And then I start looking, it doesn't mean I'm right, for Santa Claus rallies to carry the market up into the end of the year. Now, obviously, not all the time is a new high, but we're not that far away from the all-time highs. If you look at the stock indices, we probably have, a 5% correction in them. This is where money starts getting deployed. What else? A big down day on a Monday often results in a tempt. Doesn't mean it has to happen at turnaround Tuesdays. It's not necessarily a trend change. It's an area where the market says, okay, it's fallen an awful lot. Maybe I got to take some money out of this if I'm short, blah, blah, blah. The other thing you've got to look at is what's getting hit and why. Congress has a dilemma. They have the budget to get done. They have to get the infrastructure package done for political reasons, right? And then the reconstruction package. The problem for the Democrats is instead of a unified party, all they're doing is squabbling amongst themselves, and everybody wants to tie one package to the other, and no packages get done. The Republicans are quiet, saying no to everything. And they don't have the vote in the Senate putting it all together to get it passed. The market's nervous about that, rightly so. We then look at the final phase of what's going on in China. This could be their Lehman Brothers moment. What do I mean by that? So many people think it's the stock market and the companies that built China. It was real estate that this was built on over the past 10 years. Look at the size of those real estate companies. One of them's in trouble. It's called Evergrande. They owe, I think, $300 billion right now in debt, and they went into default over the weekend on one series of payments, and there's two more of them coming up Thursday. Making the matters worse is that about 1.4 million Chinese have put down deposits on apartments that Evergrande can't finish if they don't get the funding to do so. That's an awful lot of people. That hurts an economy. That affects copper. That affects lumber. That affects cement. I can go on down the road, right? So what does China do? Well, they'll probably come out at the end of the day with a rescue package. Doesn't mean that the people running Evergrande will stay there. They'll probably be gone. They got this thing into a problem. Heads got to fly. It might mean the company's split up, but how do you make the people whole? Who do you make whole? Do you make the shareholders whole, or is it about the apartment people that you got to make whole? That's what we have to look at. That's why this is their Lehman moment. But Americans don't have exposure to this that I'm aware of. I don't know our banks loaning any money to China on these real estate deals. I don't see China coming in here and doing all these plans to get Americans to invest in all that. In fact, remember, they didn't want any American investment at all. This is to them, but it does impact commodities and everything else. Understand it. Okay, so a big break here. You would expect you'd get a rally in the Swiss franc, the Japanese yen, the dollar index, and bonds and notes. And voila, you did. You'd expect to see that the VIX would take off to the upside. It went up 5 points. Not crazy. It's up at the 28 level or so. And as I said, when I thought the pros sold it, the calls the other day when it hit on Friday, the upper Bollinger Band, they often take some pressure because the calls are different than the puts. When you're writing the puts, they're so cheap when you're down at 11s and 12s versus you can run up to 40s, 50s, 60 in a VIX. That's the difference, but they tend to roll back down. We'll see if that happens. On the S&P, need I say, looking back, look at the size of the break. Welcome September, and that's exactly what you've done. You've broken down, and you're through the August lows, so you've already taken that out on the chart. The pattern is bearish. Forget today. Let's eliminate it. This is how you came in Friday at the end of the day. Lower highs, lower lows. Is there anything bullish on this chart that you see in the pattern? Not to me. If you get over 44.78.50, you break the downtrend. Where's the moving averages? Let's go back to this right now. This is how we were on Friday. Lower highs, lower lows, resistance, the 18-day average. You'd have to get up here to break that. Actually, if you broke the pattern by getting over the Thursday's high, that would have been something. But now, what's the potential target? Well, I don't have the Bollinger Band on, but I have other moving averages. If it stretched itself out, maybe the 100-day average. I did not expect that. To say, oh, I saw today was going to be down 1.66% and at one point over 2%. Sure, I did. I didn't see that, okay? But that's one of the support zones. Where's the other one then? Where's the Bollinger Band? Okay, so on Friday, here's the Bollinger Band. The market had stopped at it. So often you'll hear me say, markets like to bottom between a Bollinger Band and a 100-day average, but not when they're this far apart. That's not what I teach, okay? As it turns out, that's what it did for a day. Okay, what about momentum? Oversold as can be. So I do think at the end of the day that we have a good chance that this could be a trade bottom form. That is not a buying condition. That's a getting out of short condition, and that's what I think some traders are doing right now. When we come to the NASDAQ, let's go back and get away from today. This is how the market looked coming in from Friday. The higher high, lower low. You cannot say you have a trend. You don't. You have momentum down, bias down, but you're not trending. Today, the market gets through that lower Bollinger Band, and I'll bet it fights to get back in it this week. It's only going to be Tuesday tomorrow. Let's see what happens. In the Dow, let's get rid of today's big action. This is what I look for when I think a market's going to try to make a bottom. This. Look at how close the 100-day and the Bollinger Band. That's not a buy signal. It's a come out of short signal. That I agree with. Yes, this left a lot of money on the table. That's how it is. But if you were short on any of this way down, you still did very nice. Remember what the saying is. Pigs, bears, remember who gets slaughtered. Okay. The Russell. You're having trouble even staying underneath the band, let alone, again, the 200-day. Now, I was listening to a technician today from Morgan Stanley, and he was saying that when you go to a 200-day average, you come back down to it right away, it's often a slaughter zone. It doesn't hold the market goes down. I haven't found that to be the case in everything. I think it's a broad statement that I'm not in the camp of. I can see the rallies up here as being big-time resistance. I saw the downtrend, and I could see that the traders, this was Friday. That is not where they covered. Today was the cover zone there. I don't think anything was left on the table. In the VIX, we had talked last week. I thought the pros were going short. This is Friday if they got up to the upper Bollinger Band, and they did. And I also said, and I said it in my my morning subscriber video, you often take some heat with that. So it's not for everybody. You have to have stones in your body. It's too rough. And this is what happened today, as you can see. Okay, I still think it'll come breaking back down in about a week or so, but you have to have the fortitude. It's too difficult. That doesn't mean we don't talk about it from a classroom point of view. In the 30-year note, higher high, lower lows. What are you supposed to do with that? So you get a rally up today, close to the Bollinger Band, couldn't even poke through it. I understood people ran to it. This is how you looked. Forget today. This is how you looked on Friday. That is not a trend. Higher high, lower low. My problem since the beginning of the month is the trades that you take, once the stock indices got out of the way, all the rest are not following through one way or the other. I see it and I back away. You wait for the market to get back to a norm. If not, all that you do, it's like you're a gambler. I got to be in every day. No, you don't. You wait for your turns and you're not getting them. In the 10-year note, same thing, higher high, lower low. So let's get rid of this. On Friday, this is Friday, that's the first day you hit the lower Bollinger Band. What do I teach on the first hit of it? That's where I think the pros are taking money off the table. I look for resistance at the 18-day average, but there's no trend. You got a higher high, lower low. That's what you did today, and that's where you're at. Stay with what I teach. Dollar index, up and away you go, fine. You hit the upper Bollinger Band. You're not in a trend. You got a lower low, higher high. Let somebody else own it. I think the pros stepped out of the market today. Then we get to the euro. I'm going to flip-flop on you. First time you hit a Bollinger Band, I think the pros come out. First time you hit it, they left some money. They look pretty good coming out up there. And I think you'll look back, they won't look all that terrible coming out down here. It is not a spot where you're picking a bottom or a top. If short, you're covering. If long, you're covering. That is the game. If you're embedded, you have a different play game with it. You're not embedded in these. Let's take a look at the pound. The pound hit the upper Bollinger Band right here. Gave you 1 day to come out. The combination, this is that 100-day with the upper Bollinger Band, throws the market back. Okay, maybe you go to the 18-day average. Okay, is it a trend? This is on Thursday. No. Market follows through a little bit on Friday. Is it a trend? No. Momentum's down, bias down, but you don't have a bearish pattern of lower highs, lower lows. If you reach down, maybe you hit the lower Bollinger Band. If you go up, the 18-day average could be the zone, and this is what you're doing right now. I'll stick with what I teach. Bitcoin, higher high, lower low. There's no trend here. You've come down. The market just went from 48,600. It's down to 42,700. It's a heck of a break. The market was down today, as an example, 7.81%. It was down 0.1%, so 7.82. And here you were down 1.44. So you're down roughly 9-10%. Okay. But it should have support right in through here. And no, I'm not saying you go out and buy that. I'm saying there's no reason to be shorted. And that's my dilemma. That's what the charts are screaming. Don't do anything. When we get to the Brent versus WTI crude, the market has stayed over that 18-week average. It pulled in here. And what you couldn't afford or can't afford is to get over that little sweep to the upside. And that just happened. That literally just happened. And that's where you're at on that. Then we come over to November Brent by itself. This was the action Friday. You're still embedded, but you're against an upper Bollinger Band. I think that the pros are taking money off the table, but staying long part of their core position. On the close today, I think they bailed. You got a reading at 74.8. You've reopened. You're lower. I don't care what it does. That's what I think they did. And we'll cover that in my morning subscriber video, but I told you this morning that that was a good chance of it. Let's go back here to Friday on this market. Same thing. Higher lows, higher highs, into the Bollinger Band. You know you got to take money off even if you're embedded. You're not taking the whole position off. You're cutting your position down, and if you lose the embedded reading like you did today, so long for the rest of it. Nothing wrong with that. And now you're just waiting to see whatever the next play is going to be. Heating oil lost its embedded reading. Let's come over here. This is Friday. This is today. You're going to the 18-day average, in my opinion. Okay? And you have to be out of any longs you had there because you lost that reading. Nat Gas lost this back here. This was Friday. This is the day before. On Friday, this market said, goodbye. I've lost the embedded reading. It's under a 79 reading. So long, maybe you're going to make a run to the 18-day average. If it re-embeds, you have to take another look at it. But that's the play. It's the first time it lost it. This is today, and you just might get down there. That's how I'm looking at all this. This coming Wednesday, the 22nd, I'm going to hold another live webinar. How could we not with all the action going on? I sent out the invites already. If you don't have it in your spam or your regular email, it means you're not getting it. If you don't open the emails I send you after a few times, we don't send them. So you got to open them, otherwise you're not getting it. How to get in that event is click up here. You see this icon? That's where you can sign up. If you have questions for me, please do me a favor. When you sign up, you're going to get a confirmation that you've signed up, your password. My email address will be right in the body of that. Write me your questions now so I can prepare as many charts as I get questions for so we can just whip through everything and really cover a lot of ground. These webinars last 20 minutes. I do not record them to post them. I record them, but they're not posted. You either come or you miss it. People will write me, well, I couldn't make it, Ira. Can you explain this? No, you adjust your schedule. Come in, and I'll be happy to answer your questions. I'm Ira Epstein. You have a good day. I'll see you Wednesday at the latest. Take care.